Hello everybody and welcome back. Today I want to talk about what is happening right now in the economy and how you can benefit from it. Basically, this will be the topic of today's video. I want to cover specific headlines, specific piece of news we just learned during the past couple of hours, and how you can invest so you can outperform the market. Because as the world is changing, you have to adapt. And as you adapt, you can outperform the market. You can invest in specific stocks that will benefit from this new environment. Because I have a couple of tweets to show you today. We'll talk about what is happening with the US economy, with some tariffs, with some new mortgage measures that will help some stocks. So it will be pretty interesting and an action-packed video. I don't know how long this video will be, but we can start. In case this is your first video from this channel, welcome. My name is Christophe Nour. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I don't make a lot of videos about macro, but I'm monitoring what is happening on a micro level, right? Business-wise. And some things will change businesses in the US for this year and for next year. And I want to start with this tweet, great tweet from Ben Carlson. He's a part of the Compound podcast, which I recommend you watch. It's lovely. We are already talking 50-year mortgages and $2,000 tariff checks, and the economy is still strong. If we go into a recession in the next 3 years, Trump is going to be firing a bazooka of money at everything he can. You have to assume any recession will be short-lived in this situation. Yes, okay, so in case you were busy this weekend, basically a couple of announcements from the US government. Basically, no recession, impossibility of having a recession. Stocks are at an all-time high environment, and the US administration is worried stocks are going down. So they want stocks to go up. So they are doing everything they can to pump stocks. This is the world we live in. Next question, how do we invest in this world? Okay, so the new rules are here. Rules are changing. In the past couple of hours, the US administration introduced a 50-year mortgage plan. If you want to borrow, you can borrow for the next 30 years. Now, if it goes through, you will be able to borrow for the next 50 years. There are some stocks that will benefit from this new trend. Let me spoil you the fun. You have this tweet from Kaz saying 50-year mortgage is probably the most homeowner government policy of the last 2 decades. If you are an owner, a homeowner, and you always wanted to renovate your house, but the interest from the debt are a little bit too high, well, now your banker may seduce you into this new 50-year mortgage, and the interest payments will seem lower. So plenty of people will go for this new solution. The same way people go for the 30-year mortgage plan. So, let me spoil you the fun. Home builders, home equipment companies will benefit a lot. An example is Williams-Sonoma. So this is a very easy question to answer. How can you benefit from this new environment? You will have plenty of families that will go for this plan of 50 years. And if it goes through, and if it's a success, Williams-Sonoma, Home Depot, Lowe's, all these companies will benefit. Another example is Pool Corp. So if you always wanted to renovate your swimming pool equipment or improve the quality of your backyard, well, there are companies like Pool Corp that will benefit immensely. So Pool Corp, wonderful company. I was a shareholder in the past, and the company is still in a good shape. This may be the turnaround play. The stock has done nothing for 5 years. We are back to COVID levels. Maybe this is a sign of a bottom. Okay? By the way, Pool Corp is a company I want to invest in, so I'm monitoring it closely. It's on my watch list. I don't make a lot of videos about this one, but I've been following this company for 5 years. And the other one is Williams-Sonoma here. So furniture, home furniture, beds, kitchen equipment, and you have maybe the best management team in the retail industry. They are doing massive buybacks, they preserve margins, they grow nicely, slowly but nicely. The free cash flow is sustainably high, and they focus on efficiency and return on invested capital. No debt level. The stock is high right now, but if people get a 50-year mortgage plan and at the same time people enjoy $2,000 checks like we had during COVID, right? 2020, 2021, people will have free money. You know how people react when they have free money. You consume immediately. And I will talk about another point that is much more worrisome later in the video. The case for inflation. Because everything we're talking about here is inflationary, right? Stimulus checks, the ability for people to consume much more. This will lead to more inflation. That will create another question. How do we invest in a world with more inflation? But let me not spoil you the fun. Let me go step by step, right? So you have a few announcements, stimulus checks, 50-year plans for mortgages. If we go into a recession in the next 3 years, Trump is going to be firing a bazooka of money at everything he can. He has been pumping the stock market for a while now. He is the president that looks the most at the stock market right now. He desperately wants stocks to go up, and maybe this will end badly. Maybe not. We have seen what has happened in March this year. Stocks went down heavily because of all this uncertainty. And then since April, everything is going up. Fair enough. You have a US president, when stocks are going down, he says that he's not looking at the market. When stocks are going up, the president is boasting. He's very proud of stocks going up. Well, that's the world we live in, right? So you have plenty of measures for the US government to keep the party going. Okay? And right now, you can spot opportunities in this market to enjoy the party if you can. The music is loud, but the music can get louder. Okay? So I'm not making this video to call for a bubble at all, because actually, in desperation, the US administration has plenty of levers to continue this bull run. They can cheat, they can lie, but you have plenty of, I'm talking about the US, but all the administrations in the world are doing this. I'm French, my administration is doing too. You have plenty of reforms, but I don't make videos about the French government, right? People watching these channels are from the US, so you don't care about what is happening in France. I'm very well aware of this. Nobody cares. So let's focus on the US, right? Governments can cheat, they can lie, and you have plenty of levers. They can continue to have tax cuts. You can continue the party for a while. And I don't want to make videos that will call for a crash, also for this reason. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Next tweet here, you have a post from ZA Stocks. Well, that's a strange name, but that's Zastock, and I'm following him, and it's a great account to follow, by the way. Rate cuts, 50-year mortgages, stimulus checks, government investing directly into public companies, $1,000 direct deposits for newborns, crypto grifting, and more. You can invest in alternative investing companies like Brookfield. Plenty of things that are very bullish for stocks. It's never been more clear that they're going to run in hotter than ever. The US administration is doing everything it can to just continue this party. And now we see the signs, right? We didn't have this for the prior administration. And you have a great tweet. I want to cross-read this with a great tweet from Stock Unlock, a company, I've been working with them for years now, and they always have great tweets. Please follow them. This is bullish Robinhood. Strangely enough, if you want to benefit from this new environment of free money, helicopter money, you have to know where the money will flow. I talked about Williams-Sonoma, home furnishing, home furniture, home equipment, or home builders. Maybe not home builders, right? People that are building homes, but for home owners. They want to buy stuff. they want to consume, to buy new furniture, they will benefit the most. I think this is a very, very bullish trend for all these home equipment companies. Not necessarily home builders. When I think about it, I don't see this trend as powerful as this one. And they say bullish Robinhood, or which companies would be the beneficiaries of extra cash in consumers' pockets. If if the new generation has free money, they will consume everything. As always, you don't have a generation that is saving a lot. People love to consume, especially in the US. So yeah, you will have plenty of money flowing into Robinhood. This is bullish Robinhood. And at the same time, I want to cross-read this with Charlie. The consumer sentiment is almost at an all-time low, right? Look at this. And actually, the consumer sentiment index is known for being a contrarian indicator, which means when this metric is low, it's a good time to buy stocks. When this metric is high, people are cocky, and it's a good time to sell stocks. And it's about sentiment. Look at this. In 2022, it was the bottom of this chart. It was a very good time to buy stocks. And now we are back to 50. If you don't believe me, and if you think this picture is fake, this trend is fake, please, you can read what François Rochon, great Canadian value investor, has said about the consumer index sentiment. And maybe it will help you change your mind. This is a contrarian indicator, whether you like it or not. And every time this was low, it was a great moment to buy stock. And now it's low. For the past 50 years, 60 years, this metric has been right. So what does it tell you? It tells you that maybe it's a good time to buy stocks. And if this is a good time to buy stocks, despite the high valuation, what does it mean on an economy basis? It means interest rates and inflation will be high. It's not 100% certain, but everything drives to more inflation from what I see. And at the same time, you have stocks that are down. It's not as if everything was running hot and everything was expensive, right? Here are the worst performing stocks in the S&P 500. You have plenty of good companies that are trading at a low valuation. You have Pfizer that had a horrible quarter, minus 70% year to date. But I mean, this is a company in a bad shape right now. But you have other companies that are pretty fine, and the stock got demolished, crushed. For example, The Trade Desk, Dakers, Lululemon, Gartner. You have FactSet here, Chipotle. I made a video about Chipotle a couple of days ago. And you have plenty of good companies that are just in a slowdown, but perfectly fine. And this is a good hunting ground, actually. FactSet is a very good hunting ground. Good company, they have temporary issues. Chipotle, great company, temporary issues. Issues about the efficiency, right? In 1 year, you can fix the issues of Chipotle with a good management team focused on efficiency, right? Align Technology, same thing. You have a very good hunting ground. You have stocks that are down a lot. Pretty good companies. Dakers, also, the brand is very good. The financials are very good. You are talking about a company that is growing their revenue, growing the net income, growing the free cash flow, growing the margins, no debt. You have buybacks every year. Look at this. The charts are just wonderful. They are just creating a lot of free cash flows. Everything available for a P/E ratio of 12. And the stock is just horrible. Year-to-date performance minus 63%. Yep. So it was a darling in the past. And now it got cut in half. It's a wonderful investment opportunity if you know your stuff, if that's inside your circle of competence, right? So it's not true that everything is overvalued and you don't have any opportunities. You have opportunities. Lululemon also, same thing. I mean, if Lululemon is inside your circle of competence, you have plenty of capital to grow from here. The company is still fine. The company is still growing. The company is doing buybacks. The company is focused on their brand right now, and the stock is down, minus 67%. So you can make plenty of money in this market. It's not true that the market is high, so you don't find any opportunities. You have opportunities. People that are saying this, maybe they don't want to do the work, or they just want to avoid these businesses, but you have these businesses, okay, if you want to do the work. At the same time, something that doesn't show we are in a bubble is the amount of IPO. If this is a bubble, where are all the AI IPOs from Taekim? You had a SPAC boom in 2021, 2022, sign of an IPO, a bubble actually. In the dot-com bubble, you had many IPOs, new technological companies that went to the public market to raise some funds, and they just destroyed the performance for shareholders, right? Now, no IPOs. Nobody wants to go into public markets. You don't have immense liquidity in this market. Despite what you can read online, you don't have craziness in this market when it comes to IPOs. So you have room to grow in this market. You have room to grow. Also, if you think we have room to grow, if you think the consumer, if you think the economy is a K-shaped economy, and people will have more liquidity, more tariff checks, and if you think the 50-year mortgage plan will go through, a key beneficiary will be Fair Isaac. I have covered Fair Isaac on my channel. I've made plenty of videos about this business. It's a wonderful business. It's a monopoly. And they benefit from new mortgage originations. They just reported earnings a few days ago. The revenue for new mortgage originations is up by 50%. So this is maybe the business that will benefit the most if people go into more leverage. If they have more mortgages, they will benefit immensely because this is pure margin incremental for them. Okay, so yeah, maybe the growth will accelerate. By the way, I know some of you are interested in Fair Isaac. I did not make a video about the latest earnings so far. And they guided for a growth rate for earnings of 20%, 22%. Look at the net income chart. You have a trend that is accelerating. They guided for an earnings per share growth rate of 26%. And they've said that they were pretty conservative. If you do a control F on the word conservative for their earnings report, you see 6 times, 8 times the word conservative being said. And they also said, we are being ultra conservative. So yeah, maybe the guidance is too low and the earnings will not grow by 20%, but they will grow by 30%. They are conservative because they have a new change in business model and they don't have much visibility, right? So they are very conservative, and I think you can grow earnings by 30% for this business for 1 year, 2 years, 3 years. If this is the case, Fair Isaac is maybe one of the best opportunities in this market. I will not buy it because of a high valuation, and I need discipline in my valuation framework. But for some people, I can understand why they are buying. This is a very, very, very good business. And we just learned you have a new tailwind to this business with this 50-year mortgage plan. Okay. And this issue with inflation raises another question. If you think inflation will be high, 3, 4, 5% per year for a sustained period of time, how should you invest? If you think that the government will print its way out of any recession, if you think quantitative easing will be back, if you think for some reason interest rates will continue to go lower, if you think inflation will be high, how do you invest? 2 things. 1, you want to invest in companies that have pricing power. MasterCard has no problem dealing with inflation, right? Fair Isaac, FICO has no problem of dealing with inflation. Ferrari has no problem with dealing with inflation. They can increase their prices at a rate that is superior to the inflation rate. If the inflation rate is 5%, okay, Ferrari can increase the prices of their cars by 10%. And that's it. Problem solved. You have a few companies that can increase their prices, like Moody's also, for example, every year, and people will not care. So how to benefit from this new world with more inflation and more uncertainty? Inflation hedge, pricing power. gross margins, okay? The second point, how to invest, you need to avoid companies with a lot of debt. They will be the first ones that will go bankrupt if the economy turns south, okay? So two things how you can position your portfolio to benefit from this environment. First, focus on inflation beneficiaries that will benefit from inflation because of sustained pricing power. And two, in case of a crash, they don't have any debt, so they can survive. TPL is a good example, Texas Pacific Land, the perfect inflation hedge, and they have almost no debt. Also, and I will end this video with that, you have other opportunities in this market abroad, not in the US, but I'm looking at Korea right now. This weekend, actually yesterday, you had the World's Final for League of Legends. And I spent my whole Sunday afternoon watching this World's Final. League of Legends is maybe the most important video game in the world right now. And they just had the biggest event in the world. You had a few streaming services that went through the roof. All the metrics went through the roof. And you can benefit from this trend. You have the Twitch equivalent in Korea that is called SOPCO. Okay, so you know Twitch from Amazon, right? The streaming service. You can watch content, entertainment content, cars, talk shows, gaming. You can watch people do sports. You can watch people do video games. You can watch people do things, and you can support them by donations. Okay, very simple business model, and you have ads on Twitch. You have an equivalent of Twitch, but in Korea, called SOPCO. And I've been following SOPCO for a while, and the stock is dropping and dropping and dropping and dropping. Now let me scroll down, and you will be flabbergasted. You have revenue that is increasing and increasing and increasing. Net income that is increasing, increasing, increasing. Free cash flow, very well. Free cash flow increasing, increasing, increasing. You have absolutely no debt. This is a company in Korea filled with cash. They do small buybacks here and there, focus on efficiency, focus on margins. You have operating margins of 26%, net margins of 20%, and you have an EV to free cash flow of 2. Look at this, EV to free cash flow of 2.5. Extremely cheap. If you look at the market cap, $500 million in market cap, $500 million, but half of the market cap is in cash. So the enterprise value is $250 million. You are talking about a company that is in a very good shape, that is growing nicely, net cash, extremely cheap. And nobody on YouTube is talking about SOPCO. And guess what? Now, I just told you we had the biggest event of the biggest video game happening, and you can invest in SOPCO because I'm tracking all the traffic on their websites. Pretty good. You can check everything, right? You can check here, SOP Korea. We are something about the event created much more traffic here. You have also CHZZK, which is a competitor here, backed from Never. All-time highs. The streaming industry has boomed this weekend. So if you want to have some fun, you can maybe trade the earnings. But yeah, I will tell you if I buy it. I'm still doing the research on this one. The stock is down to a 3-year low. It is getting cheaper and cheaper. Very interesting. And yeah, this is a hidden company in Korea, and I love this company. I love this company. You have more threats of competitors, but I think this is a growing trend. The streaming industry, the gaming industry is a growing trend. And as a gamer, I understand this. So yeah, maybe I will make a video about SOPCO, but I wanted to put this small analysis in this video for today because I'm telling you, you have opportunities in this market. It's not true that everything is expensive. You have opportunities in this world. As Peter Lynch would say, the one who wins the game is the one who turns the most amount of rocks. Every 10 businesses, you will find one that is good. Every 20 businesses, you will find 2 businesses that are good. If you turn 100 rocks, you will find 10 good rocks. So it's a quantity game. It's a numbers game. The more rocks you turn, the more chances you have of finding a good gem, a good stock that will outperform the market. And this is the reason why I've been doing 25% per year for almost a decade. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.